Okay. So we are moving on to question 4 of the 2013 supplementary fundamentals examination question paper. So question 4, which is the last question, has to do with non-profit making organizations. I remember when we're doing 2018 question paper, there was also a question on NGOs, non-profit making organizations. We said these are businesses, these are type of businesses that do not have an aim, they do not aim at making profit. So their main aim is not making profit, né? But to offer free service to their members. So this kind of businesses can be a soccer club, a society like you, like a lot of societies that you have at UNAM, um, a church group or anything. Ne? Red Cross is one of a charity organization. Those are different kind of non-profit making organizations. So their main aim is just to offer service, free service to their members. So because they are not, their main profit is not to make profit, this does not mean that they do not need to keep financial statements, because for them to carry out their activities, obviously they will need funds. Ne? They will need money. There's no way they'll carry out their activities with no money. That's why whenever you deal with money, you need to keep recordings. Even you yourself, you do not have a business, but still, because you deal with money each and every day, you even need to budget and so on. Still, those are the recordings we are talking about. So with them, they still need to keep records, and yet again they still need to draw up financial statements at the end of the
You
financial
need to explain.
period. Is my network cutting?
You need to please.
Is it still cutting? Is my network cutting?
No, you are clear.
It's fine with me.
Oh, okay.
It is also fine with me.
Oh, okay. Thank you. So we're saying that now this the type of businesses also need to draw up financial statements, though they are a bit different from the trading account businesses. We said that trading account business, these are businesses that have a main aim of making profit. Ne? And then the non-profit making organizations are businesses that their main aim is to offer service to their members. So that there are quite some differences between trading account accounting records as well as non-profit making organizations. There are some differences between the two businesses. Okay, so in when we're dealing with the 2018 question paper, I mentioned a few differences, such as we said that when it comes to a trading account, we are required to draw up an income statement. Ne? A trading businesses, I mean, a trading business requires us to draw up an income statement, but a non-profit making organization requires us to draw up an income and expenditure account. So an income and expenditure account is just the same as an income statement, though the formats are different. They both calculate profit. Now with an income and expenditure account, the profit made is known as a surplus. Ne? So it's a surplus of incomes over expenditures. And when it's trading businesses, it's known as net profit. Ne? So it's known as net profit. And then expenditures are just expenses. So what in non-profit making organizations, the expenses they incur when running their business is known as expenditures. Okay, another thing we spoke of is that we spoke of another new word, which is subscriptions or membership fees. We said that with non-profit making organizations, they get their main funds are from members. Ne? So when a member joins, he or she has to pay a membership joining fee. And then again, they have to pay membership fee every month or every year. That is called subscriptions. Ne? So those are called subscriptions, and that is the main source of funds of non-profit making organizations. So that's their main income. Unlike trading businesses, their main income is sales or service rendered. Okay, so that's another thing. Again, another thing that I said with a non-profit making organization, we said that since now it's a non-profit making organization, their main aim is not to make profit, né? But this does not mean that they cannot involve themselves in trading businesses. So, for instance, it's a soccer club or maybe a society in Yunnan, and then they decided, okay, we need more funds to get for us to be able to carry out our our activities. The subscription fees are not enough for us to carry out our activities. So how about we open up a restaurant, yeah? Or how about we open up a stall in front of the Unam gate, yeah? As soon as they open up a stall, that is already a trading business. So they are involving themselves in a trading business. In these cases, yeah, in these cases, still they opened up a trading business, but that their main aim is not to make profit. They actually just want to raise more money for them to be able to carry out their activities. Now, in this case, when they are they have or they have involved themselves in trading businesses, then you will have to draw up a trading account of that certain bar or restaurant, not an income statement, but just a trading account of that trading business that they have. Now, a trading account is the first part of your income statement that ends at gross profit. So if you are told to draw up a trading account, you stop at gross profit, meaning it's sales less cost of sales equals to gross profit. That's where you end with the trading account. But now with the non-profit making organizations, that's where you end, and then you only subtract the wages of the person, of the bar lady, of the person that was selling. So you end at gross profit, and then you make sure that you subtract the wages or the salary of the person that works in that trading business. The person that works at the stall or in the bar or in the restaurant of your organization. Okay. So this question, so in this question you are given a trial balance. You are given a trial balance of Omea Golf Club, where you have a list of accounts and their balances, and you're also given additional information. So you are required to draw up a barbershop trading account for the year end. You see, a barbershop trading account, meaning that a barbershop, meaning that this is a non-profit making organization, but yet they still have a barbershop, ne, in their organization. So because they have a trading business in their organization, you will need to draw up a bar, or I mean, you will need to draw up a trading account for that business. So 4.1, you're asked to draw up a trading account for that barber shop. And number 2, you are asked to draw up an income and expenditure statement for the year. And number 3, 4.3, a balance sheet for the year end 31 December 2012. Okay. Now this with this with this unit, it's very well explained in the slides. There are 5 steps that you need to know. And whenever you are given such a question, you are likely to do all the steps. Ne? So some steps, the first step is to calculate your capital account. To calculate your capital amount. For example, now looking in this looking in this what in this trading account where we given, okay, we are given capital. Okay, another new term is accumulated fund. Ne? So when it comes to non-profit making organizations, the the capital is referred to as accumulated fund. So the word accumulated fund, just know that it's capital. Okay. Having said that, we can maybe move on to our questions, answering our questions, unless there are any questions before we start doing our calculations. It's question 4. Any questions? Okay, so if there are no questions, that we start with our 4.1. So 4.1, you are required to draw up a barbershop trading account for the year end. Okay. So I'm quickly gonna draw up the format of okay. Okay. So the first thing that you always record is the heading. Each and every statement or each and every book in accounting should have a heading. Now in this case, you're told that it's a barbershop trading account of the name of the business, and you are told it's Omea Gold Crab. For the year ended, because this is a trading account, another a part of an income statement, and we said that when you're drawing up an income statement, the heading is for the year ended. So you've got for the year ended. Um, 31 December 2012. Okay, so let's start recording. We said it's a trading account, so you start with your sales, your sales. Now you look at all the information that has to do with a bar. Now you go to your trading account and make sure that you also look at the additional information given. Okay, so you look at the bar, you're given you look for the bar sales. So if you look in the trial balance, you have bar purchases and sales, ne? So you are given two amounts. One is on the debit side and one is on the credit side. So obviously you know that sales is an income, ne? And incomes are always credited. So the sales amount is the one on the credit side, and you know that purchases is an expense. Expenses are always debited. Therefore, the purchases amount is the one on the debit side. So our sales is 179. So we record our sales 179, 730. Okay. And then from there we less closing stock. Sorry. We less cost of sales. Oh my goodness. Now, how do we calculate cost of sales? Because we are not given cost of sales, and therefore we need to calculate it. So it's opening stock. So we take our opening stock or bar. Now you are told that the bar stock of the 1st of Actually, this is 2013 and not 2012. Wait, our financial year ends when? On the 31st of July. Where did I get December now? 31st of July 2013 and not December. Sorry. Okay, so we have our opening inventory. So we are told bar stock was on the 1st of August 2012 was 17,640. So 17,640. Okay. And then we add purchases. So we make sure that we look at the additional information. We make sure we look at the additional information in cases where they are there are transactions that are affecting the account. Then we make the additions. So we are told that barbershop purchases and sales were on cash basis. So this is not really important. And barbershop inventory on the 31st of July 2013 was valued at 9,890, meaning this is our closing stock. So how much is our purchases amount? So you told bar purchases is 116,580. So 116,580. And then from there we less closing stock. We less our closing stock. Where's my calculator now? And our closing stock is we are told in the additional closing stock is always given in the additional information. So you hardly get it in the trial balance. You always get it from the additional information. And so you are told that the closing stock of bar was 9,890. So you have 9,890. Okay, and then now we have to calculate our cost of sales amount. Remember, all the negatives amount or amount that you're subtracting should always be in brackets. So let's quickly calculate. Anyone to please calculate and give me the answer of opening stock add purchases. I don't seem to find my calculator anywhere. So what's the amount here? $17,640 plus 116,580. How much will you get? Oh, thank you.
134,220.
134,220.
Yeah,
20.
20.
Okay. Now subtract your closing stock. How much will be your cost of sales amount?
124,330.
300 and
30.
330. Okay. So this is your cost of sales. Okay, so the next thing that you get is less sales, less cost of sales, then you get your gross profit. So how much will be our gross profit?
I'm getting 9. Ah? Is it correct? Is the 134, right? Minus the cost of, no. Okay, no. I got it.
179, 730
minus
minus
the 124.
how much?
55,400.
200.
So we get 55,400. Okay.
400.
And then now after that, after we get our gross profit, we need to subtract the wages of the barman or bar lady, the person that has been working in the bar. You need to subtract his or her wages. Sometimes you can be given a lot of wages. You can be given wages of staff, wages of bar lady or so. What you record, what you subtract is only the wages of the person that has been working in the bar. So let's look in our trial balance. Now looking at our trial balance, you have okay, looking in our trial balance, we have wages of bar staff, which is $28,090, ne? Wages of bar staff. So you less wages of bar staff, and the amount is. So now you first need to consider the additional information. If there's maybe an additional information that has to do with wages of bar staff. So going to our additional information, you are told that wages owing to staff as at 31 July 2013 amounted to 2,000. So the wages of bar staff that were not paid, that were owing, amount to 2,000. What type of account is this? Who can tell me what type of account is this? Accruals and prepayments. What type of account is this? So basically, this is an accrued expense.
Incoming.
Ne? It's an accrued, it is not paid, it's an expense that is not yet paid at the end of the year. The expense belongs to this year, but it's not paid. Now, what did we say about accruals at the end of the financial period? These wages were supposed to be paid this current year, but they have not been paid. Therefore, the accrual basis in accounting says that you will need to recognize a transaction when it happens and not when you receive money. Meaning that even though you did not pay the wages, for as long as they belong to this current financial period, they need to be added. Do you understand? They need to be part of that amount. So now in brackets, you make sure that you show your calculations in brackets. It's very important. So in brackets, you have wages of bar staff 28,090, right? And then you add the 2,000. Then you get how much? You will get 30,090. Do you understand? Do we understand?
Yes, we do.
Okay. And then from there, after subtracting your wages on bar staff, now we said that in a trading account business, you record only information that had to do with the bar. So usually they only give us still the wages, that's all. So you usually we only get till the wages, but in this case you have bar expenses. Now in this case you also have bar expenses. Now those expenses belong to the bar. Do you understand? Meaning that when you draw up a trading account for your bar, you need to include every information that has to do with the bar, all information. So in most cases, they hardly have an account of bar expenses, but in this case, they have bar expenses, and therefore the bar expenses belong to the bar. So you will need to include them
Add
in your
them.
trading account. Do you understand?
Mm.
So whatever information that has to do with the bar, you make sure that you include it in your trading account. So this was actually less. And then you less again your bar expenses. So our bar expenses were how much? And then we look at the additional information, if there's any additional information that has to do with bar expenses. Now looking at this, we do not have any additional information that has to do with bar expenses. So we take our bar expenses as they are, 12,500. So how much will we get? So how much are we getting? Our gross profit, we less the wages and the bar expenses. How much will we get?
12,808. 12,810.
12,810. And this is known as profit on bar. Profit on bar, and this will be recorded, will be transferred to your income and expenditure.
Uh, Wait, no. Is it? Okay, can somebody confirm the amount?
Okay.
It's exact.
It's the exact. Okay, cool.
Yeah.
Okay. So income and expenditure. So this amount is the one that you will transfer to your income and expenditure account. Ne? As it is. So it's sales less cost of sales, and then you subtract all the expenses that have to do with the bar. Now in this case, you had wages on bar staff and you also had bar expenses. So you make sure that you subtract them both, and then you get your profit on bar. And this is the amount that you will have to transfer to your income and expenditure account. So we only have a minute left before the session ends itself. So if it ends itself, then I'll just quickly reopen it, then we can continue. Okay. So the next thing that we need, we are asked to do is to draw up our income and expenditure statement for the year. And that's what you're gonna do after.
Sarah,
Yeah.
before we go there, I was distracted a bit. I'm lost here. Where did you find the cost of sale?
The cost of sales is opening stock. You add your
Yeah.
purchases of bar, then you subtract your closing stock
Yeah.
on bar.
Oh, that's what we put here on the cost of sale.
Uh,
Okay.
okay.
Yeah.
So there are only seconds left. It will actually close it so end itself soon.